All right, happy weekend, everybody. It's Saturday, June 15th. This is the our precise algorithm trading review for Friday, June 14th, of course. So I've got some new things working, like cooking in the background. Um, but let's go through all this together, and some of it I'm a little hesitant to actually share because I think it's really well, it's going to be really proprietary. So that's okay. I'll share it because our audience isn't that big. So the YM here, the Dow futures contract continues to rise, which is this is the modified version from a couple weeks ago, and this is great. I actually have another way. I think this is going to get modified even better, and that's what I'm going to dive into. So um, I'm going to try to eliminate the majority of these bad signals so I don't have to sit on just taking stops all the time. And I think well, I have to prove it, but I'm almost certain I've got it. So, and I'll show it to you. But the Russell here, I was going to go and just make this math, get into this math, but since I've actually done this other work, um, I'm probably just going to apply it to all the things going forward. So the Russell did take a stop loss again on Friday, and I'm actually not trading it with real money, so it doesn't matter. The Nasdaq fell a little bit on Friday, but this this equity curve is still really pretty great. And so yeah, Friday had one little loss, and I think I can. That's the kind of a loss I think eliminate. I can't eliminate them 100%, but I'm going to eliminate the majority of them. So let's act like if I can eliminate all of those, the pullbacks just won't be as bad, and I'm going to show you how I'm going to do that because I'm doing it in my daily trading. I just have to program it now. Um, so our Nasdaq, this is what the modified version was. I'm still tracking the old version, and it's again, equity curves have pullbacks, so this is technically fine. It's just I don't like it near as much as an upward sloping, uh, persistent um, equity curve. So it's harder to trade with all those pullbacks, which is I try to eliminate pullbacks. All right. So that's the exciting news. Let's go to the markets, and I know some of you don't like all the lines, but I am adding, or I'm not adding. These are lines that I've been working with for years. However, they're they have like new uh, importance in at least my trading. So let's take a look. This is the S&P 500. Let's go through the markets like we usually do. The S&P 500, did it go flat on Friday? Or did they just zero it out because it's a new day? The SPY went up 0.06%, so that's close enough. The Dow went down 57 points, or minus 0.15%. The Russell went down 32 points, or minus 1.61%, which is a big deal. And I'm going to pull up the Russell futures just so it's got all our lines on it. And the Nasdaq actually went up 21 points, or 0.12%, and it just keeps flying. And that's really pretty amazing. I'm going to look at Nvidia because it's such a driver right now, and it just continues to rise, which is after this. Granted, it was at $1,950, and then they split 10 to 1, so it went down to 195, and then it fell hard from there to this 123 level, and it just continues to rise from there. So that's, um, I'm sure there's some explanation to how that math all works, but anyways, it doesn't really matter. Going forward, this thing's going to only matter based on the $131 mark that it's at now, and it's rising still, persisting in an uptrend. So, what's that look like over here? I'm going to open this up. And maximize and look at a bigger part of the chart. Huh. Well, maybe not. So something else I want to do is probably look more at markets like this. So when we're looking at the S&P 500, I want to be looking at as much as I can one chart. I just think it clarifies a lot, and that doesn't mean you don't pull triggers off of the lower time frame, because you do, but or at least I do, and but at the same time we can actually pull some triggers right from this chart. Now, let's finish up what I was doing. Let's look at oil. So oil went, USO went up 0.34 points on Friday, or only or plus 0.45%. So up 34 cents, which is 0.45%. So that's interesting to me. And then we go to go to gold, because we've been watching these markets. I don't know what happened there. Got a green candle, but that's about it. And then TLT is bonds. That's bouncing pretty well. The 50 and the 100 are not in this. I mean, you're going counter trend if you're going long here, and I want to get into that a little bit too. So, and then I am in the inverse ETF for the Dow, and that's looking just fine. So, and that's obviously counter trend, because the 50 and the 100, the red lines here, are not crossed above, and they're not green. All right, so let's take the same thing I usually do. Here's you add them all together. This is what the market's doing. It's pretty much bullish to sideways overall, even when you add the Dow in there, which this is literally the Russell, the Nasdaq, the Dow, and the S&P 500. You just put plus signs between them, and you can add anything you want here. You could add Facebook, Amazon, Netflix, and Google, and get what FANG is doing. In fact, let's do that. Meta plus AMZN plus NFLX, Facebook, Amazon, Netflix, and Google, GOOG, and look at that. So that's actually a pretty cool chart to look at. All right, so let's close that, and finally the VIX. We'll put in the ES next to it here. So the VIX is sideways really just, yeah, really sideways. And um, we could look, I suppose, let's go to the VIX here. And look at the near options. The calls are priced much higher than the puts, so that's basically calling out the volatility. I also want to look at SPY just to, so something I haven't got into a lot here, but SPY in the next 2 days, this is showing plus or minus 2.87, which isn't much. And then in the next 10 days, down here, come across, plus or minus 7.68, and that's literally points. That's giving you the expected range of what that market's going to do. So let's act like we're going to go 7 points plus or minus from 545 or from 542. That isn't that high, plus or minus, in the next 10 days. So that's pretty wild that volatility is expected to be generally in a tight range. Alright, now let's talk about this. So I've got these marks on the stocks, or on the stock, on the actual price. And let's talk about this orange line. That's the 21 period moving average, exponential moving average. And my color bars go from green to red to gray when the Simple 30 system, which I've gone over plenty of times, you can go watch the old videos, when it's bullish or bearish or undecided, like this gray or this gray candle. Well, the green line down here at the bottom, that's the 50 and the 100, and when the 50's over the 100, then we have to expect the market to be bullish. That doesn't mean, and that's long term, that doesn't mean you can't have a pullback like this, because you can. What it means is that overall long term, you don't really want to be going against it unless it's in one of these kind of crossovers. And when you're doing one of these crossovers, that's where these marks come in. Or, anytime when you're coming down into, oops, that's a little bit too big. When you're coming down into these lines and you cross over the 21 to the downside, and I happen to note that a lot of times there's a fake out crossover to the downside, so I actually counted on 2 bars. If this bar goes lower than the first bar, then I want my stop to be here. And that's I don't need to move my stop there the whole time while this is climbing until I get the first or second condition. The first condition is going to be more of a warning. The second condition is going to be more of a, you have to move your stop to there. And I don't care if you move it there to the penny or to minus a nickel, but that's the place to get out. And you can see in this case, because that one was a fake out, it wasn't a place to get out, and it just kept going higher. Here, you would pull your stop up, and you could not move your stop based on the fact that it didn't go lower. But then here you can see that it did go 2 days, and you should move your stop because it did go lower. Actually, I should make it less than or equal. I'm probably just lower. Lower's fine. And then this would breach your stop, and that was a place to get out. And you can see that would have worked out fine. And then it works the same way in the opposite to come back in. So here's a place where you could have gone long, but here's the trick, guys. You can go long if it breaks above this bar, and it didn't in this case. And then this one is the crossover but above the 21, and you can go long if it breaks that bar. and it did, and then it went from there. And it's you're going to have situations like this that are going to test you. But my point is, this came down. You could make sure that you understand that, because you wouldn't see, all you would see is the first day, like that. Whoops, like that. You could pull your stop up, and you could just get out if it gets breached, or you could maintain your stop back here at a pivot, and then on the next day, oops, that was the wrong thing to do. Then on the next day, you notice that it breached where your stop would have been, but it puts in a new level down there, and you know that on the second day it's either going to breach it for real or it's going to come back up. And this one happened to come back up. So I'm going to employ this in my automated trading strategy too. And honestly, whichever way it comes out, if it breaches the stop on the first day and that gives me the best stats on the automated trading, then that's going to be fine. But I'm going to test it both ways. And the reason I'm really, this is just like an enhancement of everything I've been doing. It's just going to eliminate as many fake signals as I can. So anyway, wanted to get into that and share that because I think it's a giant deal. And let's move on. So here's the bullish percent index. That's still, doesn't, everything I just went through doesn't change any of this. This is a barometer of the market, and this is the big one. This is the NYSE BPI from investorsintelligence.com. It happens to be from True Market Insider's website, and these guys are great. So it is in a column of O's, minus 1.29 points. This is where True Market Insiders gives a whole rundown about what all this means, which I would suggest you read. And then they've got every time it flipped all the way back to 2016. This thing flipped. I mean, there's a book about it that goes all the way back into the 70s. So if you really like to get into that, that's out there. You can Google it. So that's that one, and then so bearish overall, at least short term. And point and figure, bullish. We'll look at this one, and then I'm going to get out of here. The Dow didn't move. The NYA tacked on a new O and went down 3.59%. The transportation index went down 10%. The NASDAQ went down 1.38%, still in a column of X's. The S&P 500 down 1.37%. The S&P 100, it actually went up 1.64%. And the NASDAQ 100 actually went up 5.66% and tacked on a new X. So you can see where the strength is in this market by watching that barometer and really looking at the pricing overall of the way things are moving. So hope all that was informative, and hope it helps your trading, guys. And that's it. So take care. Happy Father's Day to everybody out there, and we'll talk to you next week.